and we're preparing the live stream manager. This ought to work now. So we're going to be able to get some kind of recording out of this, which is super important. Live stream manager. This ought to work now. All right. So we're going to be, there we go. All right, everybody. I think if you're watching on YouTube live, then congratulations. All right. One last time, sound check, recording check, and you have the slides and you can see my screen. Wow, that was a pain. So I'm using a brand new machine here to make sure that we get the recording and we get everything and we get a good microphone. And it looks like we did it. Trading involves a very substantial risk of loss, and past performance is not necessarily indicative of future results. By taking part in these sessions, you agree that your trading is your responsibility. And if you need financial help, you'll consult with your financial advisor. For those of you joining us live on YouTube, you're getting a bonus today. You're jumping in on a call with some of my favorite and best traders, and we're going to look at the markets here. And so welcome to you. And let's see if we can take a look at a couple of charts here and some slides. And it is January 24th. As a reminder, the foundation of success is training. You got to get trained. And we'll save some time at the end of this session to look at some financial instruments that you want to look at and answer some questions. We're going to talk about doing recon. We're going to talk about using part 2 of using magicformulainvesting.com to find some trades. We're going to look at the UVXY. We're going to look at the pound yen. We're going to look at home and LABD. And we're going to talk about our schedule for next week. So before we begin, I want to do some training, as we talked about. And I want to talk about losses, because learning to lose is the most important skill that you can have. There is no more important skill than learning to lose. You cannot succeed as a trader unless you first learn to lose fast and lose small. The rule of thumb is, for me, that I am willing to risk 1 to 2% of my total account balance when I've pulled the plug on a trade. For me, that's really, at a maximum, it's about $4,000, but I actually kind of cut things off at about $1,000. And if I had a $10,000 account, that rule of thumb would say, hey, close this out when you're down $100 to $200, and so forth. I mean, this is really, if you don't learn anything else, this is really the most important thing. You can't focus on anything else really until you are ready to obey this rule of thumb. And you can trade any size you want as long as you obey that rule of thumb. But there's a corollary to this conversation. So let's talk about the numbers of trades. So if you've learned to lose small, if you have 500 trades going, you are still going to lose all of your money because you have too many trades going. So keep the number of open trades to a, and this is going to be an important distinction, to a manageable number. I would say 5 to 6 different positions on different financial instruments. Now, if you're running a robot and the robot's trading a bunch of stuff, that's not really complicating your life, because the robot's got that under control most of the time. And you're only really going to need to step in and help out the robot maybe on 1 or 2 of those positions at any given time. So you still fall into the line. So these 2 things are critically important to your success. You can't get away from either of these 2 things, and you need to take a long, hard look at your own experience, and I need to look at mine. And from time to time, I need to say, all right, am I cutting my trades off quickly? And am I cutting my trades off at losses? That's why we practiced it yesterday. And second of all, do I have 50 million trades going right now? And if I do, what's wrong with me? Seriously, what's wrong with me having 50 million trades? Something is clearly wrong if I've got too many trades open. You can't manage, you don't have the brain power to manage that many trades. So the foundation of success is training. And if you don't train yourself on losses and numbers of trades, then you've really set yourself up for a giant problem. And today I want to practice losing. I don't want to practice losing so that we can just lose all the time and be sad and cry on each other's shoulders. I want to practice losing because winning takes care of itself once you play defense. Learning to lose gracefully is playing defense, and defense wins championships. When you protect your troops, you have more success in your missions. Okay, so we're going to practice that today, but I want to do part 2 of sort of training you on magic formula investing. Now, a bunch of you are joining us on YouTube. So welcome for those of you joining us on YouTube. I'm running this call today on YouTube as well as inside of our webinar software, kind of as a bonus and kind of as a hello and kind of as a thank you to everybody that subscribed on YouTube and helped us get to 50,000 subscribers. So we're at 51,000 now. Tell your friends or whoever else. Okay. So if you're just joining us, for the first time in a while live, I'm glad to have you here. And for those of you that are on this call every day with me, appreciate you being willing to share our time today with a billion people on YouTube that will end up watching this video. If you've never used magicformulainvesting.com, you should start using magicformulainvesting.com. Because some of you weren't here yesterday, I'm going to remind you of what this is. It's a formula for picking stocks that tend to go up over time and have typically beat the market consistently. Joel Greenblatt wrote a book called The Little Book That Beats the Market, and in that book, he details this strategy. But the website that accompanies the book is free. All you have to do is register for a free account, and you can scan for these stocks yourself. I want to walk you through the technique for scanning a group of stocks, and then I want to teach you a strategy that you can use to trade those stocks on a consistent basis. Remember that all trading involves a substantial risk of loss, and nothing that I'm about to say is meant to be financial advice or meant to recommend any particular financial instrument to anyone. And if you need financial help, consult your financial manager dude. All right. Magic Formula Investing is a formula for scanning for stocks. You want to learn what the formula is? Go get yourself a free account at magicformulainvesting.com and read about it. Number 2, we're going to look for stocks that are reasonably small today. Stocks with a market cap of maybe even as little as $500 million. Smaller cap stocks tend to move faster than larger cap stocks. Got it? Then we just press 30 and we get stocks. And here we go. Now it's the same list of stocks mostly that we got yesterday. It's the same list. You'll find that this is the case unless we get really big. So we can go back and do a scan and say that we want the company to be a, I don't know, $100 billion company. I don't really know what that number is, but here you go. You get a whole different set of companies, MasterCard and Merck and Microsoft and Pepsi and Philip Morris and whatever else. And these are the big ones, right? These are really, really, really big companies. $1 trillion market cap for Apple, $1.4 trillion market cap for Apple. Microsoft's a $1.2 trillion company. I did not know that, and so forth, okay? But we're going to look for smaller ones today. Let's even look for $50 million. Let's see if we get a different, there we go. Jounce Therapeutics, Lee Enterprises. Let's look at Lee Enterprises, Inc. Let's just look at it. Now, according to Magic Formula Investing, Lee Enterprises is supposed to be the kind of company that goes up. It's supposed to have a magic formula associated with it, some kind of, I don't know, whatever. It's supposed to outperform the rest of the market based on its own blah, blah, blah. It's detailed in the book and on the website. And what we're going to look at are places where we get bullish divergence and then a bullish profit circle. You can look these videos up on YouTube if you're joining us today on YouTube. And you can also just scan the web for Rob Booker Knoxville divergence and Rob Booker profit circles or reversal tabs, and you'll find these indicators floating around the internets somewhere. Okay, so it looks like on December 31st of 2018, we had bullish divergence and a bullish reversal tab. So I want to jump over here to Thinkorswim, and I want to type in Lee in the ThinkBack Manager. And I want to go to, let's just pull up the date. So already forgot the date. 12/28, I don't know, 12/28, 2018. And Lee was trading at $2.13 at the time. That sounds about right. Now there looks to be some options available on Lee back then. And we want to give ourselves, let's give ourselves at least a couple of months to March. And it doesn't look like there's really going to be a whole lot to choose from here. There's a $7.50 strike. Now I could just go ahead and buy the underlying, right? I think that it's reasonable to just say, hey, we could just buy this in the think back because it's only trading for $2.13. And I'm going to buy 1,000 shares. That's going to cost me $2,000 to do that. So I buy it. Now, what's great about the think back mechanism in Thinkorswim is we can now move forward in time and see how this would perform. Now, when we take a trade, we've got to know a couple of things. We've got to know how much we're willing to lose. That's know your stop, KYS, know your stop, KYS. Repeat after me, KYS, WKYS FM, losing thousands of dollars at a time. So I know that I'm at a maximum, I can lose $1,000 of this. I bought a $2 stock. I traded 1,000 shares. If it moves down $1, I will have lost $1,000. Ding, 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 ding. I can do simple math. So I know that this can move down $1 against me. Now I could trade fewer shares and allow it to move $1.50 against me. I could trade more shares and only allow it to move 50 cents against me or whatever else. But I also need to know the profit target. And in this case, we have a brilliant and perfect profit target. We have a missed monthly pivot above price. There you are. Looks beautiful. It's beautiful. So it's beautiful. That's our target. I mean, I'm fine with that being the target. As you can see on the screen here, it goes much further. If you're going to write me today and say, oh my gosh, why didn't you go for more money? You can go away and never come back. I don't want to talk to you because we're not here to try to make something more. We're trying to make something. So there's know your stop, KYS, and there's know your target, KYT. The target is $2.42 a share right near the monthly pivot. Now, could we go for more? Well, once we have our first target hit, we could. So we take a first trade. Now, for those of you that have been following along this conversation with me over the course of the last week, our first trade could be smaller than what we could take. Our first trade could be 1,000 shares. And once it reaches our first target, we may feel so confident that at that point, we're going to press our advantage and increase the size of our trade. We may feel at that point in time that we want to take some profit off the table and move to break even. Okay, we may decide all of those things. Listen, we first have to get to our target. So what we do in the think back mechanism is we just move the dates forward and we see how the trade is doing. And you can see here, the P&L open is on the right-hand side of the screen. And we're up $70, $40, $60, $220, $300, $210. This is great. I mean, this is really cool. We know our trade price. We know our trade date. So by the 10th of January, we're at $2.44 a share. We're only up $210. But it's looking nice. $340. So here's a decision we have to make. It's the 13th, 14th, 15th of January, and we have to decide what we're going to do. At this point in time, I think what we do is we take our money and we run. I think that is generally going to be your best decision. If you have reached your mission objective, you take the money and run. Now, we do have missed weekly pivots that are higher. So we could take some of our money off the table and let the rest of it go. So I could drop this down to 500 shares left. And I could let that go further until we get up to, $2.70 a share on the 25th of January. And then we've made another $495 and we close our trade and we're done. That's training. That's talking about what you would do. So first, we did recon. We used magic formula investing to find a bunch of stocks. Number two, we waited for the stocks that tend to go up according to that formula to drop and go on sale and produce a buy signal. Once they produced a buy signal, we sent out a little scouting expedition and we took our first trade. Now that trade at a maximum can lose 1% of my total account balance. In some cases, maybe a little bit more. If we know our stop at that point, it means we don't have any questions arising when something goes wrong. If you have a mission objective in the military or somewhere else, you need to know when it's time to retreat and pull back. You can't just let people die. You can't do that. And so trading is so weird because we don't feel that same kind of pressure. So, but you have to know the same answer to the same question. You have to know your stop. So you know your stop and you know your target. You have to know when you've reached the objective. Ding, ding, ding. And once you've reached that objective, you can make a decision in the field. Is this bursting upward? Is the relative strength index all the way overbought? Does it potentially have more room to go up? Then I can press my advantage and try for more. Or I can take the money and run. Thank you, Steve Miller Band. So welcome everybody that's on YouTube. Super happy to see you here. All right, so I'm going to look at the questions that came in here. The scouting position gives you confidence, says LaDonna. Totally and completely and absolutely yes. 1000% yes. Now it moves much higher and you're going to later on go, oh, I wish I'd gotten more. Okay, fine, fine, fine. Yes, you could have gotten more. You could also have, given back all the profit you just made. So, you decide. Let's just pull one back up that we haven't looked at yet. Something trading. I don't like oil stocks. I don't really like stocks trading for $2,000. This is not the price of the stock. Okay, good. Phew. That was, momentary lapse of reason. Hey, let's look at Paladin Technologies. That's Peter Thiel's company. So let's just scroll back in time. We're really only looking for buy trades, but we talked about this yesterday. And for those of you that missed it, the magic formula investing stocks, when they produce a sell trade, they're also pretty effective. Let's do this one. Oh, wow. We can't really short. Sure. We could try to short $1.27. I think this is this the right one? Is this Paladin Technologies? Is this the Peter Thiel? No. It's a pharmaceutical company. Okay, fine. I don't care. Fine. We could short these as much as we can buy them. 23rd of April, 2018. So let's look up PTN. So it's not Peter Thiel's company. PTN, April 23rd, 2018. Trading for about $3 a share. That's not correct. 24th of April, 2018. Trading for about $1.29 a share. What are we doing here, people? Yeah, it's the right stock. It's the right symbol. It's the right date. 23rd of April, 2018. Non-trading day. Oh, the stock price isn't even changing. That's kind of weird. That's really weird. Let's just see what happens if we sell it. I don't think it has the data that it needs to short it. So let's work through it manually. You could do this on your own on your charts. So we short it at $1.26. I'm going to trade 2,000 shares. And that's going to cost me 2 times 1.26 or I'm going to 2,000, let's just say it's $2,500 that's the position's value. And let's talk about know your stop. So I know my stop loss is going to be $1,000. I traded 2,000 shares at $1.26. So if this moves down $1, I've lost $1,000. So if this moves against me $1, I have to close the trade. Well, that's easy enough. I traded it at $1.27. My stop loss is way up here. Now, what about my target? I've got a missed pivot right here. I've got a missed pivot right here. I might even have a missed pivot. Yeah, I do, all the way down here. So this is a maximum target. Okay. So I move forward. The stock goes against me. The trade goes against me. I don't care. And then it just starts to drop. Now, do I want to hold it all the way to my final target? Well, I did have a missed monthly pivot all the way down there. But what if we just wrote it to say, so we take our scout position. We know we're willing to lose 1% of our total account balance. It gets down here about a month and a half later, and we take half of our position off the table, and then we let the rest of the position ride to the final profit target. Now, just by working through that, you get an opportunity to test what you would do in this situation. But we also have to do training on when things don't go the way you might have hoped. What if you were to short it here on the divergence and the bearish profit circle? It's trading at 77 cents a share. If I trade 2,000 of those shares, if I short 2,000 shares and it moves against me $1, then I'm a loser. It rises to $1.62 at the most. It doesn't even move against me $1. That scout position, if you want to be crazy about it and hold it all the way through, you could hold that position. Now, I'm not encouraging you to do that. I'm not telling you that you should. I'm telling you that you could. You could actually have held that position during that time. It wouldn't disrupt your financial situation. It's a scout position, so it wouldn't have been a problem. And you get another opportunity over here. If it prints another short setup, you could theoretically trade that and add, and you could deploy more troops. You could say our first troops are safe. They're just locked in a position that they can't get out of right now. We could send in and flank the enemy from another direction, send in more troops, and we're fine. We're not losing. We're still not losing. You can add to an unfinished position. Don't call it a losing position because it hasn't lost yet. It's an unrealized loss that hasn't exceeded your limits. So don't call it adding to a losing position. That's not a correct term. I can't remember what I just called it instead. If someone could remind me what I just said. And then you get to be in this position, for a whole year. What a pleasure. Not really, right? But you didn't do anything wrong. You didn't make a mistake by doing this. It's pretty cool. All right. So that's our training for today. An unfinished position. Like an unfinished mission. It's okay to finish the mission. It's okay to deploy, you haven't lost your troops. Remember, like having a trade that went against you but didn't reach your stop. That's not a loss. It's like having a tough time at work on a bad day. You don't just throw your job in the toilet because you had a bad day at work. It's just an unfinished project or thing that's going on. Okay. That's some training for today. I hope you enjoy that training. Let's talk about some trades that we have. We have some okay ones and we have some not okay ones. Here's UVXY. This is a long story and it would take a long time to fill all of you in on the complete and unfinished story. but we jumped the gun and anticipated that volatility will increase. So we put our scout position in action. Okay. I traded 35 contracts of the March 20th $12 calls. It's down $350 right now. I'm looking at it right on my screen. And I'm fine with that. This is an unfinished position. The RSI has $1 billion to go up from here. It's amazing. It's a perfectly reasonable trade to have. If this loses $1,000, I know my stop. Now I also know my target. We have some unbelievable missed pivot targets higher than where we are right now, all the way at $23. So this could double. This is a potential significantly awesome position. I bought these options for $1.53. If the stock goes to $23, those options will increase in value 5 or 6 times. And I would be very happy to have that be the case. Now, I also did some magic formula research yesterday. We looked at AMCX. It dropped. We were waiting for it to drop. We may buy AMCX. I'm not ready to make that decision. What else did we do yesterday? Didn't we look at, oh, here we go. We have all these. We got them. We looked at Club. So let's scan through. Club is okay. We talked yesterday about the fact that, you know, if we didn't already get in it, it dropped in price. It might be a nice place to give it a shot. Still long ONTX. I'm still short AER. So $29 billion in debt. It only makes $3 billion a year. I like the February $60 puts. I bought them for about $1.40. MIME is up today. This is not down $1,000, but I put my scouting position on. We talked about this in our recent sessions. We had 4 bearish profit circles and a bearish divergence. And I liked it. Got plenty of room on the RSI to drop. I'm fine with it going up a bit. I don't care. And I can lose $1,000, or in other words, it's about 0.5% of my total available trading capital. I have the March $118 puts on IBB. I bought them for $4.20, and they're doing okay today. That position is down $158. It has the potential to be up a significant amount. Now I'm also long. Let me tell you what I'm long. I have 10 $13 June calls on LABD. This goes up if the biotech stocks go down. This is what I would refer to as technically a perfect trade setup. I'm up $50 on the position. I plan to close this trade if I get to 500, 600, anywhere between $500 and $1,000 on that trade. NLS down a bit, nothing really to say there. DS not really going anywhere today. GTE not doing well lately, but the trade setup is still there. If we get a bounce, we'll be fine. Still can't lose more than $1,000. Home, this was one of our brand new things that we talked about yesterday. It didn't go anywhere today. So there's nothing to update there except for it didn't go anywhere. And ABB is not yet a trade, so we're not going to worry about it. And I'm going to take some requests from our coaching group, BCOV. Oh, that is just absolutely lovely. Bright Cove Incorporated. Let's look at Open Insider and see if Bright Cove has any. Oh, insiders. The CEO, Jeff Ray, bought 5,000 shares at $8.45. Already owned 25,000. He spent $42,000 on those. Way to go, dude. And he did that last February. I like it. Got an insider buying their own shares. And I like it. I think that's a neat one, Jeff. I think it's got all the elements. We'll keep this on our little list to watch on a consistent basis. Jeff also wants to look at TDKY. Now, I can't give any particular financial or specific advice to anyone specifically, so I can't tell you what you should do in any given situation. That's not my place. And you have to make decisions for yourself, and past performance is not necessarily indicative of future results. And nothing that I'm about to say is meant to be a suggestion about buying or selling any particular financial instrument. And I'm going to talk about this technically. The bullish case for this is that it's in an upward trend. Okay. Obviously. The bearish case that we have bearish divergence, 2 bearish profit circles, and about 1 billion missed pivots below. What does TDK do? Let's find out. Yahoo Finance, TDKY. Manufactures and sells electronic components in Japan. Okay, so TDK used to make those tape decks and stuff. Okay. Do they make money? They have a profit margin. They have a return on assets. They have negative revenue growth, but they do have gross profit. And they do have enough money to pay their debts. They have $1.41 for every dollar of short-term debt that they own. And they have a book value per share that is actually a positive number. So it's a good company. It's reasonable that it's in an upward sloping thing here. But that's technically a perfect technical setup. If the company were also deeply in debt or had reported earnings that were off, or suggested that they're not doing as well, those would worry me. The cool thing about this one is that there's earnings coming up, and so there's the potential for a lot of volatility, but it doesn't look like earnings really causes any giant moves. 2 bearish profit circles is always really interesting to me. You could see here when it printed 3 bullish profit circles, it was a rocket ship, and it did really well. So I like it. I think you've stumbled on 2 really neat, perfectly technical setups. So Robert says, so should you have a dollar target and a time limit? I don't believe in time limits on trades necessarily, Robert. It's a case-by-case basis. I mean, let's say you're in a trade for 4 months. It's not going anywhere. It's negative. It's halfway to the distance to your stop, but you could put your money somewhere else and have it go to use somewhere more effectively. Sure, that's a case-by-case kind of conversation. Okay, we'll do APRN, and then we're going to do the dollar, Australian dollar, New Zealand dollar. Blue Apron. Oh, interesting company. Okay, so deeply, deeply oversold. Lots of bullish profit circles. Are we seeing any buyers here? CFO and the treasurer. Nope. 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 I wouldn't buy this in a billion years. Nope. It's just Blue Apron Holdings. No profits. They have revenue, but no profits. No way. No way. I wouldn't touch that with a 50 million foot pole. There's not even any insiders buying that one. Here's Store. Store Capital Corporation. It looks bullish. I mean, it's in an upward trend, and you got bullish divergence and a bullish profit circle. So if this company is a profitable company, I would favor the long side because it's in an upward trend. That's how I would feel about it. The bearish case to be made for this is if it's got bad fundamentals and no earnings or lots of debt. I don't know that about this stock, so I can't tell you, but those would be the situations. All right, so this is the Australian dollar, New Zealand dollar. We're going to look at the daily chart. I don't really have anything to say about buying this yet, but if I could get a bullish profit circle here, Ali, I would certainly consider it because this has been dropping far and fast enough that it needs maybe a corrective move. Let's look at pairs. Let's look at the correlations here. Okay. Yeah, I mean, we're widening here. The Australian dollar is falling, the New Zealand dollar is rising. This is supposed to be staying very, very consistent with each other. So Ali, you're on the right track here. And so I'm going to be clear once again, I'm not giving any specific trading advice. I'm not encouraging you to buy or sell any particular financial instrument. But Ali, if this prints a bullish profit circle, even on the 4-hour chart, I'm down. I'm down for that. I'm even going to say if it prints one on the 60-minute chart. Not one, not an old one, a new one. Let's look at the dollar Swiss for Jeff. Daily chart. Nothing really. There's not even any bullish divergence there, so it's hard for me to justify anything. There's not even any bullish divergence recently on the 4-hour chart. Okay, that looks like an inverted head and shoulders to a certain degree. Shoulder, head, shoulder, or head, shoulder, head. Siamese twin pattern. I would wait until it rises. The new level that I would wait for would be 97.32. And then I'd be okay buying it upward from there. And then our old favorite, the pound yen, which I wanted to get around to today. Looking good. I'm short the pound yen, and I'm going to add 40 billion units to this trade once it drops below this trend line on this head and shoulders pattern. I am short the pound yen. I'm thrilled to be short the pound yen. I think I can make $1,000 on this trade, and I look forward to making that $1,000, and I think about it every single day for at least an hour. Sue says, why were you looking at the daily charts? Oh, because Ali asked me to. I ordinarily would not care about it. I would ordinarily not look at it at all. Okay. All right, everybody. Thanks so much for being here. Once again, for those of you that joined us on YouTube today, hey, thanks for being here. Leave a comment, share the video, leave a like. The likes really help. If you didn't like it, leave a dislike, although that's super rude after I went through all of this for you. But leave a like it 1,000,000 times if you can. If you're watching this on YouTube and you're not subscribed to the channel, please subscribe to the channel. I've got some great stuff. And if you haven't watched the video, go get it on the YouTube channel. Go over to YouTube today and watch Go Get It. It's one of my most recent videos, and it's a message that I think is important for everyone to hear. For those of you that are here on the coaching call, I'll see you again on Monday morning, finally at our regular time. And I love you all. Thanks so much, everybody, for being here. I'll talk to you soon.